go ahead and just introduce ourselves.
Absolutely.
So,
Welcome. My name is Mark Serrano with Impact Properties. Been a realtor since 2002, so have a lot of years of experience. I can help first-time home buyers, move-up home buyers, whatever you're thinking about. I can definitely answer questions, and we'll go over quite a bit this evening.
yep, and I am Marina Meza. I'm with EZ Fundings. I am the loan officer. Um, so when we go over this first-time home buyer seminar, we're going to go ahead and teach you on how you actually start the process. And any questions that you guys have, please feel free to just chime on in, okay?
And that's going to be nice that there's only a few of us. So whenever you feel like you have a question, don't wait. Kind of, just say question and we can stop. And that way you don't lose your train of thought. Because sometimes if you wait too long, you'll be like, oh, what was I going to ask?
Yeah, exactly.
It's okay to jump on in. We'll make it not so formal.
So we are going to go ahead and just start this off. So we are doing our first time home buyer seminar for anyone who is interested in purchasing. And we're going to be doing this more often. So if you like this and you have friends or family, anyone who's interested in trying to do this again later, we're also going to record ourselves to hopefully share this link with somebody. So the first slide, oh man, let me go back. The first slide that I have is how do I buy my first home? The pre-approval process is the very, very first step in doing or in buying a house. So step one is you have to take an application. Now, an application is something that could be done over the phone or online through a link that I can send to you. But most of the time I like to do it over the phone so I can ask you all the questions that I need to ask you. But an application just consists of a few questions from you. So your name, your date of birth, your address, your social, your employment history, and just any kind of credit history that you may have. That's all stuff that we need to at least take into consideration. And then we can go ahead and once I've gotten all your paperwork and run your credit report, I can let you know what you guys are pre-approved for. So step two is running a credit report. There's 3 bureaus. There's TransUnion, Equifax, and Experian. Once I do run your credit report, we use your mid FICO score for qualifying for what your rate is going to be. A lot of people ask me, well, how do you get a rate? How do you get the quote? It has a lot to do with your credit. So if you have good credit, that's really, really good. If you don't have good credit, then that's why we run your credit report, so I could give you advice on how to get your scores up. But for an example, if your credit scores came in at 702, 643, and 689, your middle score would be 689, your high score would be 702, and your low score would be 643. So the middle score is what we would use for the rate.
And this part of the process is super, super important. A lot of times people get excited and kind of qualify themselves.
Oh, yeah.
There's a lot of different calculators online, and that's a great way to kind of get an idea. But before we start shopping for a home, this is the most important part. So that way, when you go and you shop for a home and you find something you love, you're prepared to write an offer if you find the house that you really like.
Yes. And 99% of times, realtors will not take you to go see a home until you've been pre-approved.
Yeah, 99.9.
Yeah, almost always.
It's just super important. It's an emotional roller coaster, and what happens is if we take you out prematurely, you're going to end up finding something you love, and then maybe you don't qualify for it, and you're going to get heartbroken, and kind of you feel like you're stepping backwards instead of stepping forward. So super important. Get your pre-approval first.
Okay. So.
Any questions so far from that first slide about getting pre-approved?
So you, the credit score, it's your FICO and it's your 2 of them, and you calculate it based off those 2 scores, correct?
Off of 3 scores. So
off of 3 scores.
Yes, there are 3 credit bureaus that report your credit. There is TransUnion, Equifax, and Experian. Those 3 credit scores are the ones that pull. And then once we actually pull your credit report, you will have 3 different scores. They're not usually all exactly the same. And we go off of the middle FICO score of those 3 scores.
Awesome. Thank you.
So I have a question. When you say that we're pre-approved, does that mean like we're already done with the application and you ran it already, or?
Yes. So in order to get pre-approved, I would have to do all of this first. So if you meet with me and we put in all of your information, I run your credit report, I get all of your pay stubs, your taxes, your W-2s, all of that stuff, and I calculate everything, then I can tell you, okay, based off of your credit, based off of your pay stubs, based off of all of this information, this is what you qualify for. And then that's when you are considered pre-approved. I am telling you, you can purchase up to this price. And that's when I would go ahead and send the pre-approval packet to your realtor, and then you will go ahead and then each of you guys would get together and start looking at homes.
And then the approval, when would that one come in?
The actual approval happens once your house is or once you've actually gotten an offer accepted in your home. So you want to go over that part?
Yeah, definitely. So once you get an offer accepted, Marina is going to get the purchase contract that we agreed upon and that you've got accepted. With that purchase contract, she'll actually be able to submit that along with all of your documents, escrow information, and then she's going to work on getting a formal loan approval. But that's usually time frame 10, 14 days.
Yeah, it's going to take at least a couple of weeks for an underwriter to review your documents. They're going to take a look at everything, and then they will come back to me and say, okay, you are officially approved. I just need 3 more pay stubs, or I need a copy of a bank statement or something like that. And then that's when I would come back to you and tell you exactly what the underwriter wants. Once you get me those documents and we send it back to her, she clears those conditions, and then you are officially approved. We can fund your loan. So there's a little more that goes into it that our escrow company does, our title company does, that even, us, that we do on the back end that you don't see, but there's a lot of things going on. But we take care of all those things for you guys.
And
so there's sorry.
No, go ahead.
Is there like a chance that the pre-approval have or might have the wrong loan, the amount of the loan?
There can be a chance if your situation changes. Let's just say, and that's what we're going to go over, the do's and the don'ts of purchasing a home. So if a person gets pre-approved with me and I say, okay, you can purchase a house for $450,000, and then they go out and they look for a house, purchase or try to get a house that's $450,000, and then they go buy a car. Now they're no longer pre-approved for that amount because they just bought a new car, or let's just say, those
they co-signed
for a car, or they
okay, so it would be something like a significant change to credit, right? My credit score.
Yes, definitely. So if you open brand new credit, if you start going and buying furniture before you're even in the house, that can make a difference. If you go buy a brand new washer and dryer, and then
because you found it on sale and you don't want to miss out. We get it. It always happens.
So it's recommended to not do any big purchase or any credit.
You want to keep everything exactly the same.
Just go window shopping until you get the house.
Yes. And don't quit your job. Don't go from full-time to part-time. Those kinds of things. Those are the situations that can change what you pre-approve for.
Thank you.
Okay.
Great question though. But to go back to the original question, with the pre-approval that Marina produces, you're pretty much, as long as you don't change anything, it's pretty much almost an 80% guarantee that you'll be okay as long as nothing else changes.
Yeah. Yes. So,
I have a question.
Uh-huh.
Sorry. I have 2. The first is once you're pre-approved, how long does that approval last for?
90 days.
90 days.
90
Awesome.
days from the day that we run your credit report. So let's just say I run your credit report today. It is the 19th of October. So your credit report and your pre-approval will be good for January 19th. And then after that, if you do not find a home by that time, your pre-approval, you're more than likely going to still be pre-approved for the same amount. I would just have to rerun your credit report and submit a brand new, package
Right.
to him. So that's how it would work.
Beautiful. And then my second question is, when you apply, is it better to let's say I have good credit. Is it better to apply alone, or is it better to apply with someone but that person has no credit history?
Good question. Okay, so if you want to qualify by yourself and you have good credit, then that's wonderful. Assuming that you make enough money to purchase in the price range that you want to purchase for. Nowadays, with the housing market and the cost of houses, it usually takes about 2 people, a borrower and a co-borrower, to qualify for what they're looking for. But you can definitely qualify on your own, but it may be a significant difference if you have 2 people. But we do have to use the lower of the 2 scores. So let's just say I ran your credit and you had all 700 FICO scores, and then the person that you ran the credit with you was your girlfriend or your significant other or your parents. If they have no FICO scores, which means that they just literally do not ever use credit, then we would have to make sure that they apply for a credit card and start using it for a month or 2, then automatically they would get some scores. If they have 600 FICO scores though, we would have to use their scores for qualifying and not yours.
Wow.
That's how it works.
Wow.
Okay.
Oh my goodness. Wow, that's okay. That's good to know. Thank you so much.
Yeah, no, that's why I'm really glad that you guys are on here, so you guys can ask us any questions you have.
Those are all great questions, by the way.
So
Thank you.
So I have a quick question. How many people can be on the loan application?
as many as you want. Most of the time, most people don't have more than about 3 to 4. If they, usually it's a husband and wife or boyfriend and girlfriend, and maybe a brother or a sister or a cousin, something like that. But most of the time, it's usually 1 person, 2 people, 3 people. But if you guys, you can have up to as many as you want, as long as it makes sense.
The most I've ever put on a purchase contract is 6.
Yeah.
That was the most. So
Yeah.
it was a mom and dad and 3 kids, I think, or 4 kids. They were all filed and qualified.
Yeah. And you can do that. And let's just say you want to buy a big house, and it has to make sense. Because if you guys have 6 people on the loan and you go buy a 2-bedroom house, they're probably not going to it's not going to make sense. So in order to have that many people, you would have to have a big house with enough space for everybody that's going to be on that loan.
Or a triplex or a fourplex.
Yes, exactly. So.
Great question, though, Juan.
Yes. So the next slide that I just put up is an example of what an application is. So if you're looking at it, it will say the type of loan that you're applying for. So we can do VA loans, FHA loans, conventional loans, USDA loans, which are rural areas like farmland. And we can also do mobile homes that are actually fee simple, that are actually implanted or planted on their land, and that's your space. You don't actually have to rent a person's space. So those are the types of loans, and I'll go over those later. But this is also going to show you the loan amount, the interest rate, the number of months that you are going to be applying for your loan. Most of the time, first-time home buyers do the 30-year fixed loans. So 30 years divided by 12 is 360 months of payments. We 99% of the time do fixed rates unless you want to go into an adjustable loan. But most of the time, people that do adjustable loans are people that flip homes. They're not going to stay in their loan. Right below that portion, it shows TBD, which means to be determined, of wherever it is that you want to purchase. And on the very bottom of the slide, it says borrower, and that would be your information. So it would be John Smith, Ryan Santos, whoever it is that's going to be applying. It'll be your name, your social, your date of birth, your phone number, your address, if you're married, you're unmarried, or you're separated. And then from that information, we will go ahead and run a credit report.
Perfect.
So let's do the next slide.
Credit.
Yes, credit.
So went over quite a bit of that.
Yeah.
But we'll go over just in case we didn't miss any.
Yeah, so this is good for anybody to know. So just so you guys do know, 640 or above is the standard credit score that most lenders want to see in order to qualify for a loan. We can do loans that have 580 FICOs, but you're going to get a really bad rate and you're going to have to come out of pocket more for, a down payment just to get qualified. So in those cases, if somebody has really bad credit, I would just tell them how to fix their credit. And some of these are the ways that you fix your credit. You make sure that you pay down your credit cards to about 30% or less. So for example, if you have one credit card and it has a credit limit of $1,000, you never want to put more than $300 on that credit card at any time. That's the 30% of your $1,000 limit. You never want to max out your cards. You always want to keep your credit cards low. So even $300 is considered kind of a lot. You want to keep it as low as possible, but that's where you're going to be in the 600 range. If you want to go to the 700s, then keep like 10% or less on your credit card limits. Another thing is do not co-sign for anyone, not even brothers, sisters, whoever it is. You want to make sure that you are not co-signing for people because it does affect your qualifying. And someone just came on to our chat. Daniel, can you see us, Daniel? Oh, well, I'm not sure if you could see us, but if you can, hi, Daniel, thank you for coming on. We're going over credit right now. So another thing that can help you in credit is never ever make a late payment, ever. Please don't do it. If you guys want to know, I've had somebody who was in the high 700 FICO scores, made one late payment on their truck payment and went down to 586. It was crazy. So just with 1 month, that it can affect you really, really bad. So,
and I'll just elaborate really quick on the late part. Whenever you're late, let's just say your payment's due on the 1st of the month and you pay it on the 5th, that isn't what she's talking about. It's when you wait 30 days. So on the 31st day, you make that payment that was due the first prior month.
yes.
That'll impact your credit. So if you are in a bind and you're going to be 5 days late and get a little bit of a late fee, that's okay. It won't affect your credit, but just don't ever have a 30-day late.
Yes, that's correct. And if, let's just say you are late by 5 days, 6 days, most of the time, if you're never late and you want to waive that fee, you can just call the creditor and tell them, hey, I'm so sorry. I completely forgot about this payment. Can you waive my late fee? And like 90% of the time, they'll go ahead and waive it for you, as long as it's not a consistent thing. But it's good to know so you don't have to accrue any late fees. Another thing is do not open up a new credit card, or only open up a new credit card about once a year. Use it, pay it off monthly. You don't want to open up like 5 cards at a time, just like one. once a year, and then you can go from there. Do not ever close your credit cards. If you do not ever want to use it again, just pay it off in full. Make sure that there's no fees attached to it, and the creditor will go ahead and close it for you eventually. But it does not affect you when they close your credit card account. It affects you when you close your credit card account. So,
and the only time they typically do that, I think, is when you don't use it at all and it's got a zero balance for like a year and a half, and you never touch it, then they'll eventually just close it out.
Yes. And you're fine if you, like, that's happened to me before. I used my Best Buy card and bought a computer, and then I never use it again because I never go back to Best Buy. I paid it off, don't use it, and they'll close it for me in that year, something like that. And then if you really want to use it, keep on using it. But if you already know you don't go to that store often, just let it go. Another thing is, if you're offered a credit increase, definitely take it. The more credit availability that you have, the better. So let's just say that you have $1,000 limit on your card and they offer you a $2,000 limit. That means you're doing really good. Take that $2,000. Don't go on a shopping spree, but just know that they're trusting you with more credit. So definitely take that increase. It's not going to affect your credit negatively. It will affect it positively.
Good point.
Another thing is, do not check your credit, or do check your credit from bank apps often, because those don't affect your credit, but do not run your credit often for applying for credit if you can avoid it. So those are just a few tips on credit, but if you have any other questions, let me know. I can go all day about that. So.
Any questions on that slide? Okay.
Nope.
Okay, we'll move on.
Okay. List of documents needed. Once we do go and file your application, which was your name, date of birth, social, things like that, then I will actually officially need a copy of your ID, a copy of your social, a copy of your 2018 and 19 W-2s, copy of your 18 and 19 taxes, your most recent 3 pay stubs, your most recent bank statement, and if you happen to have any 401ks, mutual funds, stock, retirement accounts, anything like that, a copy of that as well. Because the more savings or money that you can show in the bank, the better it is for your qualifying. Even if you don't use it, it just looks good. Any questions on that?
Good.
Okay.
Here we're going to just go over some do's and don'ts. We've talked about some of them earlier. Things that you should be trying to do is save extra money when you can. Keep it in your savings. And again, if they see a regular ability to save, that helps you when you're getting qualified for a loan. Stay current on all your accounts. Make sure you don't ever have a 30-day late. Make sure you're keeping up with your payments. That's also another good point too, is you don't ever want to be late on a credit card payment because they'll also up your interest rate on your credit card. So I've been there a long time ago, but I was like, what? It was 14, now it's 26. What happened? Oh, you were 2 days late on the due date. So make sure you stay on that as well. Continue to use your credit as normal. Just, make your regular payments. Provide all required documentation to Marina so she can help you get qualified. All of those documents that she went over prior are super important. So every single one, you got to figure out how to find it. If you don't, probably call your tax guy if you don't have your returns, or maybe your W-2s. They usually have copies of that stuff. Anticipate that we may ask for additional documentations. Yes. So it just depends. They might see something that triggers a question, the underwriters, and that's part of Marina's team. And they'll say, you know what, can we see this document? So try, like I've had weird things where I've seen clients that are frustrated and they're like, well, every month my mom transfers me $200 and I pay her card for her because she doesn't know how to go online.
Yes.
So it happens a lot. So then they'll say, so they want to understand that. So they'll question it, even though it seems harmless, and it typically is harmless. They just want to understand it so they can not over scrutinize it.
Yeah.
And ask a lot of questions. That's what we're here for, to help educate you. We've obviously have a lot of years of experience. We've probably heard it and seen it and witnessed it and experienced it some way. Don't hesitate to ask. There's no bad questions. They're all great questions.
Yes. And just to go off of what you said, in a situation where an underwriter does say, hey, what is this $200? All we have to do is write a letter of explanation, and you tell me what it is that situation is, and I write that letter of explanation for you. We send it to the underwriter, that condition gets cleared. So it's not like anything that's going to hold us back,
No.
or nothing like that. They're just going to ask questions that they feel they need to ask. So those, as long as we can explain it, it makes sense, we can do it.
Yep.
So the don'ts of trying to apply for a home: try not to change your jobs in the middle of doing this, if you can avoid it. Although there are circumstances where, let's just say you get a killer job deal and it's the exact same type of job, you know, go ahead and do it if you have to, but try to wait until after the process is over, if you can. Don't apply for new credit. Don't take out any new loans or make any large purchases. That's huge. If you do that, your debt to income ratios change. Don't change banks or make a lot of cash deposits. So even, for example, something as minimal as $200, but there's been times where people sometimes go sell a car and then just throw $9,000 in their account, and then the underwriter's gonna say, where did that $9,000 come? It's not coming from your pay stubs, so where did that go? So as long in that situation, we would just have to see that you actually sold your car and just show proof of it. So try, if you do have any kind of things like that happen, make sure you keep documentation. Otherwise, if you say, oh, I just sold my car, but you have no proof, that would be a stop for us. We would have to stop it at that point. We would have to show proof of it. Don't pay off a lot of loans or credit cards unless you ask first, because sometimes that will affect the qualifying process also.
Good point. Yeah.
So,
any questions about any of that stuff we just went over? Okay.
Yeah, I have a question.
Sure.
So what if somebody wants to help us with the down payment and they give us money?
yeah, you can definitely use help. So that is something called a donor, a gifter. So somebody, it can't just be any random person. It usually has to make sense. It has to be a family member, a mother, a father, a grandparent, a cousin, something like that, that would be willing to gift you money for your down payment. So let's just say your brother is willing to help you put in $5,000 going towards your loan. All they would have to do is show us proof in a bank statement showing that they have $5,000 in their bank account, and then write a letter, which we will send to them, but they just have to sign the letter stating, I am so-and-so and I am Juan's brother and I'm gifting him $5,000 from this bank account and my signature. And that's all they have to do. And then at the end of escrow, they will wire that $5,000 directly to the escrow company. They do not give it to you, okay? So don't ask anybody to give it to you first, because then we're gonna have to source that money. We don't have to source it when they send it directly to the bank.
Makes sense.
I have a question also. I live with roommates and they do pay me $800 each monthly.
Mm-hmm.
And they do like a sell transaction every month.
Okay.
Do I need to show proof of that, or?
Not unless you are going to use that as
Okay.
income. But you would have had to do that for 2 years consistently for us to use that as income.
Oh, okay.
Okay.
Okay then.
So yeah.
Okay.
Unless it's going to be income that, one, you actually claim on your taxes, or two, can show us proof that for 2 years you've been receiving $800 and they're going to be moving with you and continuing to give you $800, then then we wouldn't be able to use that as income.
Is regular child support considered income?
Child support is considered income. So if you have child support, then you would count that. Same for child support for fathers or mothers who actually have to pay child support. That is going to be affecting your debt to income ratios. So if you have to pay child support monthly, let's say $500 a month, that is something we have to add in there as something against you. So just note.
And how unemployment?
Unemployment, we can use unemployment as long as you are going to go back to that job and we know that you have a start date. If you don't have a start date, we cannot use that job.
Okay.
Good question.
Anyone else? Nope. Okay.
Great.
So these are the loan programs that we offer. FHA is the one that most people get into, most first-time home buyers get into, because it's not as credit driven. You need a 640 FICO or more, and you can have a little bit higher debt to income over conventional loans. Though all of these loans I can go over more in person once I actually pre-approve you, but these are just the loans that we offer. So there's FHA, there's conventional, there's VA loans. So if you have been in the military, you definitely want to go VA because you don't have to pay mortgage insurance. There's manufactured homes, which are mobile homes. The only ones that we do are called fee simple loans. It means that the actual mobile home structure is on the land and you own that land.
Usually required that it's bolted to a foundation.
Yes. And there are different mobile home parks that have that. We do have first-time homebuyer programs that can help you with down payment and closing costs. Right now, because of COVID, they are not doing it as much. And then it also depends on what your situation is. So as long as your income is less than a certain amount and you're purchasing in a certain county or area, we can usually help you with different home buyer programs that help you with down payment if you do not have the money to come in with that. But for these first time home buyer programs, you just have to know that your rate's gonna usually be a little bit higher and you will have to pay back that money all with interest most of the time. We do also do land loans, which means if you just want to purchase a parcel of land, you can. And I also do credit repair, and I can do loans in all 50 states. So you don't have to just be for here in California.
I only sell real estate in one state, California.
But yeah, but for me in general, if you have any family or anybody you know that wants to do a loan, we can do it in any state.
Great. So here we're going to go over benefits of home ownership. Some of the things maybe you've thought of, but maybe haven't been able to articulate it. Appreciation. Every year, typically homes do go up in value, and that's what they call appreciation over time. That happens when you're just sitting in the home making your regular payments. The market continues to rise, you earn that equity, and then that's considered appreciation. It brings happiness, you know, the feeling of owning your own home. It's kind of the American dream. You know, everybody wants to own their own piece of land in our area, wherever we live. And that just makes your kids feel more secure, make you feel secure that you're not renting and you don't have to worry about somebody coming in raising your rent or asking you to leave and so forth. That would kind of tie into roots. It helps you, you know, makes you feel that you have some roots where you live, and that way people can feel comfortable knowing that that's going to be yours and no one's going to take it away unless you decide to sell it. Equity, there's a lot of things you can do with your equity down the road. You can use it to leverage it to maybe send your kids to college. You can use it down the road to maybe do a home addition. You can use it for just a lot of different things, but you know, it's kind of like a savings account that's happening without even thinking about it. That's the way I usually like to explain it. Tax savings, there are definitely tax benefits. When you're a homeowner, you typically get to write off interest. You would check with your CPA and your accountant. Typically, that's one of the write-offs you get. Also, with your taxes that you pay, with owning a home, you got to pay real estate taxes every year. And those real estate taxes, depending on how you set up your taxes, they're most of the time that you can write off a portion of them. Education, research shows that children of homeowners typically test higher with their test scores. And I think it just has a lot to do with the feeling of happiness, the roots, them feeling like that's your guys' home. No one's going to take it from you. It just security brings a lot of security. So I just usually like to go over that because, a lot of people say, why buy a home? Why don't I rent? I love my apartment where I'm at, and that's great too. But unfortunately, renting doesn't bring all of these things as a package. So just thought we would share that with you guys. Any questions about any of that stuff that we just went over? Okay.
Nope. Okay. Let's make sure that no one's. Okay, let's see. Let's go to the next one. So these are just a couple of questions that a lot of people ask me when it comes to employment. You do have to be employed for at least 2 years, 2 years solid. You can go on a break if there's a circumstance. So let's just say with COVID, let's just say you are a nurse and COVID happened and you had no childcare for 4 months, but you are on unemployment up until, let's just say July, and now you're back at work. That's okay because you've been employed this whole time, but there was a circumstance and you needed to take off that time. Now we're back at work. As long as you can show proof that you're back at work full time and you're not planning on leaving, we can use your full income. Another thing is you can go from 1099 to W-2 as an employee, but you cannot go from W-2 to 1099. If you did that, you would have to be a 1099 employee for 2 years in order to qualify. Also, you can change employers as long as you stay consistent in the same type of position. So for example, you can't go from a truck driver to a teacher. You have to go from a teacher to a teacher, or a office assistant to another office assistant. It just has to be consistent. But if you completely change careers, it won't work. Another thing is you can have up to 6 months off of employment for a 2-year history in order for it to stay in effect. Like I said before about some circumstances happening, we can still use your income, but the more income, the consistent income, the better. So, and also if you have 2 jobs, you would have had to use or have been employed with both jobs for 2 years. That means you've gotten 2 W-2s. If you have not had 2 W-2s, then it's not considered the 2 years yet. So if you've only had 1 job for 2 years and the other job for 6 months, we can only use your first job. Any questions on that one?
That's good stuff. I'm gonna check the AC real quick.
Okay.
Warm over.
Yeah, it is getting a little hot. Okay, and this is Mark's screen.
Oh, sorry guys, it was getting a little warm in here, so turn up the AC a little bit. So just really quick, talking about the current temperature of the real estate market. You guys have probably been hearing a lot about it. Interest rates being so low, that usually drives up the demand. So right now there is a supply and demand issue. Right now there's currently 2 to 3 months of supply in homes for sale in Riverside and Orange County. What does that mean? That means that if no other homes came on the market, it would take 2, probably right now it's closer to the 2 range. It would take 2 months to deplete all of the homes for sale. So after 2 months, if nobody else had listed their home for sale, there would be no more homes for us to look at. So that's why it's super important to understand that, because right now it is a super competitive market. That's where my expertise comes in. I'm going to help you prepare your offer. I'm going to help with Marina's help. We're going to put together your offer with your pre-approval. We're going to package it so that when we submit it for the seller to review, they'll actually be impressed with the way it's written, how it's presented. All of those things do matter. As a listing agent, I also list homes for sale, and I do get offers and I see what people are submitting. And sometimes it's all kind of pieced together, so it doesn't make a lot of sense. So what I usually do is write a cover letter for you. I put all your documentation together along with your offer. We usually provide proof of your down payment. All homeowners want to see that. They want to be able to understand that whatever you're writing on the contract, you're going to be able to produce during escrow. So I'll help you put all that together when the time comes. Again, interest rates for real estate loans are currently at a 3% or lower, which it's at an all-time low. If you're renting right now, you should really, really try hard to figure out a plan to buy, because rates aren't going to stay like this forever. You know, there's a lot of things that are going on in our world. To me, that doesn't matter. What matters is saving money. And right now, with interest rates as low as they are, you're definitely saving money. You're paying more towards principal rather than interest. So if it goes up to 6%, 7% someday, that means you're going to be paying a lot of interest and not a whole lot to your principal. So that's kind of how you have to look at it from a homeowner standpoint. Average home appreciation is 9% from a year ago. That's huge. National average is anywhere from 2 to 3%. And for some areas, 2% is really high, such as, like, you know, you're talking about states like Texas or, you know, I don't know, Arkansas or wherever else you have family or friends. Their appreciation goes a little slower, but like New York, San Francisco, Orange County, Southern California, that appreciation typically is a little bit more aggressive, and it just goes back to supply and demand. Any questions about the temperature of the real estate market right now? Okay, we'll move on to the next slide. How do I find a property? These are most common asked questions. When I meet with somebody that's ready to buy and they're ready to go and have been pre-approved, they want to find out, like, how do I find a property? Or they're really good at it and they start going to like Realtor.com, Redfin's a popular one. You can go to my website. There's so many different websites you can go to. Those are all great avenues. We just have to figure out how to, I guess, shrink your search criteria so it's not everything. So I can be more specific, and so can you on the apps that are out there, like minimum 3 bedrooms, minimum 2 baths, max price 450 or 500 or whatever the price is. So you can get really specific on your searches. And what I have access to that you don't is to understand the conditions of the sale. So the listing agent will usually put in the agent remarks, basically, these are all of the things that have to happen in order for you to see the property, for you to submit the offer, what the seller's expecting to see. Maybe their home is contingent on them finding a replacement property. Those are all of the things I can go into detail with you once we start narrowing down what you're looking for. How do I submit an offer? I went over it a little bit earlier. Basically, we put together an offer contract. It's a residential purchase contract. And with that, we fill it all out. We put in how long we want an escrow. I'll go over that in a minute. We put your financing. That's like on the first page. So that's Marina's going to help me with that. And she's going to say, Mark, this client's putting 2%, 3%, 5% down, or whatever that number is. We're going to indicate how much of a deposit you're going to put towards that purchase. And I can go over that when that time comes of what they do with that deposit. And then once we put everything together, like I said, I usually write a cover letter and just tell them a little bit about you. You know, selling a home's an emotional thing. So they want to know that someone's going to come in and maybe love the house for everything that they've done. They don't typically like to hear that you're going to start painting, knocking down walls and doing this. They usually don't want to know all those things. So I usually tell the clients, what do you like about it that's making you write the offer? And then with that, I can help write the cover letter and submit it. Home inspections. Are home inspections necessary? I 100% agree they are necessary. You want to understand the overall condition of a home. It's not designed to scare you away. Homes do require maintenance, and that's what we want to do. Is as a seller neglected their home, and now them being neglected Is that going to create bigger problems for you financially? And that's what I'm there to help you figure out with the home inspector. So they check plumbing, electrical, roofs, like anything you can think of. They go through the house with a fine comb, and they basically give you a report, and they say these are all of the things. Sometimes that's kind of a general inspection, and let's just say you have concerns because you have a really strong nose and you think you smell mold. Okay, let's get a mold inspection. You know, that's rare. I don't see a lot of it, but it does happen. Let's just say you're buying a home on a hill, and part of it's slanted on a hill. You probably might want to get a soil, inspection to make sure the soil is solid and it's not going to collapse later. So those are all those different types of inspections that are out there. You can, like I tell clients, you can do whatever you want. You even want to get, as long as whatever inspector we hire, or I should say you hire, they just have to be licensed and they have to be insured. Because when they're coming in the house, you don't want them to have an accident and not be insured. For example, I've had clients, oh, my dad does plumbing, my brother does concrete, my other cousin does drywall, and they all want to come on a Saturday and go through the house. Not okay with the seller. Unless, again, they have a license they can produce and they have insurance. So you want to get those type of inspectors that are professional in the inspection industry. So that way the seller knows that if something goes wrong or they break something, they're going to fix it and pay for it. What is an escrow? Escrow is a third party that basically facilitates the transaction. When you submit an offer, the seller accepts, that paperwork goes to an escrow company. The escrow company then creates escrow instructions, and they reiterate everything that's on the purchase contract as how long is an escrow period. It can be 30 days, it can be 45 days are the most common. I've had escrows that are 90 days long. It just depends on what the seller is looking to do. Maybe they bought a house, but it's being built and it's not gonna be ready for 2 months. So they want a 60-day escrow. It just really depends. So that escrow company will help facilitate it from start all the way to the end. And the money that you're gonna be sending in as your down payment that you and Marina have discussed and you guys have agreed to, that money will go to that escrow company so that they can receive the funds and eventually close the transaction. So escrow is that third party, and they're a neutral party. They're not representing the seller and they're not representing the buyer. They're working for everybody to make sure that everything's facilitated properly and everybody gets what they're expecting out of the transaction. Next big one is a lot of people, as a buyer, they say, well, how much do I owe you, Mark? What's your fee? The great news is, and she did a cute slide, it's not you.
Not you.
So you don't pay for my fee. Typically how it works is a seller will list a house and they come up with a commission that they agree to and they pay my commission. So you don't owe me anything. So that's one free thing that you get when you buy a home is you don't have to worry about the realtor's commission. So they pay for it all and nothing's owed to me from you. All I ask is that you give me an opportunity to work for you and I'll prove to you that I'm the right agent to help you get into the house that you're looking for. Any questions? I went over quite a bit there. Maybe go back to the other slide.
Yeah, let's go back. So just to go over a couple of things that Mark said, home inspections are not required by the lender, but they are something that we would strongly suggest that you do. That is something that you're gonna have to pay out of pocket, and it usually is about $250 to $300 for a good one. And that's when he said somebody who is licensed, insured, bonded, they will go through the entire house and give you the report so you can see what you're buying. And then that's an expense that comes out of your pocket, but we suggest that it's a really, really good investment for you, because you don't want to go into the home and then a year later you're like, what the heck did I buy? This is broken, that's broken. If you would have had an inspection, you would have known that before you purchased the home. And
yeah, that's super informative. The home inspections typically take, depending on the size of the home, anywhere from an hour and a half to 2.5 hours. And that's like I said, they go through and they check the breaker box that controls power to the house. They go through it pretty thoroughly, and then they come up with a report like Marina said, and then through there, we'll go through it together. That's what I'm there for, because I see a lot of these every day. And I'll go through and help you understand which ones are significant to be concerned about and which ones are very common. Because remember, sometimes you're not going to buy a brand new home. So there are going to be things that were okay to do from a home builder 30 years ago. And as of today, they're no longer used. They still work and they're functional and they do what they're supposed to. But they're just, the inspector will have to disclose to you that that's not up to code. So that can sound scary, but it's not. It's totally normal. Unless you're buying a new home. If you're buying a home that's built in 2020 and he says that's not up to code, that's a concern. Because that means they're cutting corners one way or the other.
Okay.
Any questions so far?
No?
Oh, great.
Okay. Well, oops, let's go back. That concludes our information. This is my information. I am Marina. I am a loan officer, broker. This is where I work in Rancho, but I can meet you pretty much anywhere that you live. We have offices everywhere. My website is marinamesalending.com. You can also Google me if you want. That's my NMLS number that I am licensed, and my information here. And this is
And that's my information there. That's my website, my email address, my cell phone. My office is located in Placencia. That's part of Orange County, but I pretty much don't ever go to the office unless you want to. I work out of home, and a lot of times I end up meeting the clients at the property. So, you know, we talk over the phone and we say, okay, here's the 5 houses we're going to go look at. And we usually go meet at the property, and that's where we start off at. But again, that's my Department of Real Estate number. I'm licensed through the Department of Real Estate since 2002. You can look it up. I don't ever have any violations or anything like that. But all that's public information so that you understand who you're working with.
Yep.
Any questions?
Yeah, does anyone have any questions? If not, that concludes our.
I got a quick question.
Sure.
If I get let's say I get pre-approved and I have my amount and I needed I wanted for Mark to help me, but I wanted to look in the South Bay area, not in the not over there. Is that something that you would be able to do? Help me with?
Talking about like
Gardena, Torrance,
yeah, absolutely.
all this area.
I have access to everything in Southern California, and believe it or not, I have sold homes in Gardena and Bellflower, like all that area out that way. So I have access to everything, so I can definitely help you out.
Awesome. Thank you, Mark.
Yeah, no problem.
That's all my questions.
So did you guys feel like you learned some stuff?
Hopefully, that was the objective.
Yes, it was very informative. Thank you.
Okay. If there's anything else that you guys want to know,
So yeah, write down our info and just feel free to reach out one-on-one, and we're both here to help you. And again, we want to make you feel comfortable. And the most important part of buying a home is being comfortable with the process. Because if you're uncomfortable, you're going to be nervous at night, you can't sleep, and you know, it's totally normal. Buying a home is a big deal. It's let's just say you're spending $200,000, $300,000, $400,000. That is a lot of money. When an average car is like 30 grand, that's what usually most people spend on a car. Buying a home is a super big deal. So don't be afraid to ask questions. I want you to sleep at night. I don't want you to stress out. I want you to be very informed. That way you're comfortable. And when someone says, oh, did you go and get a home inspection? You're like, yes, we already did. We talked about that, and this is the plan. Because a lot of people will do that and create fear where, you know, they're like, make sure you do this, make sure you do that, because everybody has a story. I want you to be prepared for those stories so that you feel confident that you know exactly every step you're taking to protect yourself and understand the process.
It's our job to make it as easy as possible for you.
And exciting. It's got to be exciting.
Yeah.
It is exciting to buy a house.
Yeah, so, but aside from that, if you guys don't have any other questions,
I have one.
Oh yeah, what's that?
Sorry.
No problem.
Is it so for the FHA loan? is it possible to do an FHA loan and provide no down payment and still get a house, or would it be better to just do the first time home buyers program loan, but then you're stuck with possibly a higher rate and pay it back with interest?
So there is no program where it's no money down. You would, if you did qualify for the first time home buyer program to receive down payment assistance, then they would be paying the 3.5% down payment for you. But there is nothing, there's no 0% down. And even when you do qualify for those down payment assistance programs, you do have to have some money in the bank, at least, $2,000 to $3,000, because you have to put down an earnest money deposit once your actual offer has been accepted. So what an earnest money deposit is that the homeowners of that home, that they're the sellers, are going to accept your offer. They're going to say, okay, we want a deposit of $3,000, and you have to go ahead and put that money down, because down payment assistance won't front that to you right away. And you will put that money in. It has to be your money, or it could be gifted to you by a family member. And then that money stays in escrow until the whole process has been done. And then at that point, down payment assistance will go ahead and cover that money. And if that money has not been used, that $3,000 goes back to you. But it usually is used in at least a couple $1,000s. So most people that do use down payment assistance have to come in with just a little bit of money, and that's not that much. So
okay, beautiful, thank you.
Absolutely.
but yeah, let's see.
Well, thank you guys. Like Marina said, that concludes this presentation. We're definitely going to have more of these coming up. So maybe if you didn't grasp something from this one, you can join us again. We'll kind of share it with everybody as well when we'll do our next one. Or if you have friends that you think will benefit